This time we're going into our annual audit. Mr. Peter Morgan here on the leg. Go over that audit with us.
Good morning, again, my name's Peter Morgan, I'm George Morgan this evening. I'm just going to briefly go over the annual audit with you. Each of you should have a copy of the report. What I'd like to do is just go over the highlights. There's some summary information in there, and I'm going to go over that. I'd like to start off by telling you our job is to express an opinion on your financial statements, and of course what we like to see is an unqualified opinion, which in this case your financial statements do have an unqualified opinion in them on page 1. We also have to do a report on internal controls and compliance with laws and regulations. There's a report on page 65. Happy to tell you we didn't have any findings or question costs there, so both of those are what we would call clean reports. If y'all would turn to page 5, there's a little summary of condensed balance sheet or statement of net assets. And the detail of this is on page 14, but this will kind of get us to the bottom line of what the assets were as of September 30th, 2009. Your current assets, which are primarily your cash, receivables, and so forth, it combined balance at the end of 2009 was $13,879,000, and that's compared to $21,864,000 the year before. And that's looks like a big drop, but the year before you had some bond money there that the project was being worked on. So it's a $7,984,000 drop, but actually $8,054,000 was spent out of the capital projects fund. So I mean that's money there to be spent. Actually, the general fund had a positive balance. It actually went up $461,000, so that was a good result there. The overall cash balances were general fund had $8,074,000, capital project had $4,670,000 left at the year end, and then the other funds had like $48,000. Your liabilities were $16,157,000, and of that, $13,920,000 was your bonded debt, which is something that was incurred to do a lot of improvements on the hospital and so forth. Your net assets, which is net equity, and again, this includes your fixed assets, net of any depreciation. And depreciation, again, is not something that, it's not a cash item, so, but for reporting purposes, we're required to put that in there. So anyhow, our net assets were $51,350,000 at the year end, which includes $43 million of capital assets, and then $8,194,000 would be your unrestricted net assets. Does anybody have any questions about that? On page 6 is just a summary of changes in net assets. Again, this includes all assets and all liabilities are factored in, interest, depreciation, and so forth. So, from a budgetary standpoint, this one here would include items that are generally not budgeted, which is depreciation. And it does show down here, if you get to the bottom line, and I'm going to go over the details of some of this in the next page, but it shows a negative reduction in net assets of $1,180,000. However, we had depreciation of $2,445,000. So, if you back that out, you would actually wind up with a positive balance. They all spent out of bond funds and other funds about $9,800,000 for capital outlay, and $8,750,000 that came from the bond fund. So you actually spent about $1 million for out of your operations and so forth. I'd like to turn to the next page. It has the general fund, and that will be page 10. I say next page, but I'm kind of jumping around here. Y'all find that. This is a comparative of your general fund, and for 2009, 2008. you can see you had a pretty good increase in property tax revenues, about 16% in the general fund. And that's because you had a significant increase in your valuations, about 430 million roughly. Some of the other areas that changed, your intergovernmental went down 126,000. Of course, that's primarily grants, and the year before you got a $179,000 grant for some emergency vehicle, and that wasn't there this year, so that's the main reason that decreased. And of course, one of the things we're all aware of, interest is not there anymore, so your income from your investments dropped from 367,000 to 171,000, so that's a $295,000 decrease. But still, with the tax increase, your overall general fund revenue went from $10,509,000 to $11,370,000, so you got a $861,000 increase there. The expenses, you had $10,910,000 compared to $40,546,000. A lot of the variances there would have to do with the capital outlay. Y'all did some work on the annex. Other areas the year before, and golf course and so forth, there's some big capital outlays in 2008. So there's big variances there. And most of your other variances, your increases were like the financial administration and so forth. There were budgeted increases, things that you had anticipated. Actually, there were no negative budget variances here. And there's a report back here on all your budget comparisons in summary and in details to let you know there's no negative variances at all. And again, going back to the general fund, we had an increase of $460,000 in the fund balance, which really I think you should be pleased with. A lot of entities we have audited that actually wound up, using a lot of their fund balance just to balance it. So it's, I think y'all have handled your budgets close to in well. That's really about all I have. We have another little report that we put out on the juvenile probation, which I don't know if y'all have that. There was no findings or anything in there. Of course, the funding agents look at that and let us know if there's any questions they have. But like I said, the bottom line is I think everything went very well. And of course, the audit, we work closely with Daryl and all the management and so forth. And I think everything worked smoothly. And we have a little side report in here which we did if we had any problems. We did not. So, and I think everything went well. Does anybody have any questions? Again, I'm going through the numbers verbally, but I know you have other things on your agenda, so we'll be happy to answer any questions you might have.
You brought the juvenile to school. I'll have to provide you copies. Yeah.
Yeah, the numbers are in this report here, because they're part of your special revenue funds. All of that report has to be August 31st, whereas this is September 30th. So that's the funding agency that require it as of that day.
Do you have any questions?
Just appreciate the thoroughness, as always. Thank you. Appreciate the opportunity to work with you.
Do I have a motion to accept the annual audit, financial audit that's received? Forward, second. Work. Any other discussion? Again, appreciate it. All in favor?